YouTube, what's going on? Just a couple of vibes. Let me sit up straight, y'all. No slouching. I be slouching. I went to my physical therapist and he told me why I slouch. Made so much sense. But yes, thank y'all for tapping in. Thank y'all for hitting that thumbnail, man. Thank y'all for rocking with your boy. Appreciate you. For all the people who ain't never been before, thank you for hitting that thumbnail. Could hit 1,000 million thumbnails, but you hit mine. For all my subscribers who've been rocking with me, appreciate y'all. Welcome back. If y'all already know, I don't like long intros and everything like that, but I gotta show my gratitude. Y'all make sure y'all tap in and hit that subscribe button, like, share, subscribe. Before we get going, y'all already seen the title, so y'all know what's going on, man. Crazy times. I ain't even gonna lie and act like I'm surprised. I'm really not. I think just because I pay attention to what's going on in the economy, I love economics. I am what I consider to be an econ. I'm not, academically an econ, but I think I can rock with some of those econs out there and just everything that's related to economics. But what do we do now? What do we do? I know, go tap in with that new what to do when. Because this is kind of a what to do when. So I might just throw this under the what to do. What to do when the stock market crash. So, man, like, how y'all feeling about it? Let me know in the comments what you invested in if you want. What's your plans? If y'all got any idea of what you think you're going to do to pivot. But let's get to it. So what to do when the stock market is crashing? First thing first is make sure that you understand what correlation means. So we're going to talk about the stock market first of all. And if y'all seen the long intro, I had to put the Become Better More Money intro in there because, this isn't financial advice. You go to a financial advisor, CPA, etc. This is for edutainment purposes. But it's good to understand what correlation means. So in short, correlation means how much one company or one asset relates to another asset in your overall portfolio. And the correlation to volatility, the correlation to any cyclical issues or things that are related to the government that might happen on a cycle, seasonal issues that may come. So understanding correlation is important because if you look inside of your portfolio and you notice that one asset that could be correlated to another asset is doing bad, then most likely it doesn't matter if you're diversified because those things are still correlated enough to where they can affect each other, if that makes sense. So I would say if the stock market is crashing, the first thing you need to do is to look at your portfolio and say, how much of these things in my portfolio are correlated? So for instance, let's just say energy and mineral stocks are down, like lithium. This is arbitrary and say that this has happened in a scenario. If minerals like lithium, copper, excuse me, y'all, if nickel was down, then most likely EV companies will be down too. So you would say, well, if EV's down, or mineral is the things that base the batteries off, or if they're down and they're not doing well and they're having drama, they're having cyclical issues, then that's going to affect the EV chargers. That's going to affect the EV companies. It's going to affect the Teslas. That's going to affect the Rivians and the companies who are EV companies. So that's a quick little example for correlation. So that's what the first thing I would say is look inside your portfolio and see if you notice any correlations. The second thing I would do, which is outside of stocks, is make sure that you have some type of cash that is equal to, if not half of what you will be getting from your investments, or a third of what you'll be getting from your investments. So simply said, if you're gaining 9%, then you should be trying to find some vehicle to put your money in that's 4.5% return or 3% return, if that's what you're normally going to get when the market is not crashing. Just so you can say, you know what, I'm not fully invested in assets and securities, so this is only messing up this type of money. But I think that's somewhat basic economics 101, or should I say securities and stocks and investments 101. So I won't harp on that too long. The second thing is making sure that you are understanding how important it is to pay attention to like the news, and not necessarily the news that everybody is getting scared of, but pay attention to the news to the point to enough to say, okay, I know what's going on. Because what happens is a lot of people don't realize how late we are, but it's okay if you're late. As long as you're just staying up to date, it's kind of like, it might change, it might not. But just don't be in the dark. So pay attention to what's going on and see if anything is related to what you're seeing in the market. Because that's called like fundamentals. So the fundamentals are like the underlying reasons of why stock price might be a stock price, like the inner workings of the company's value, and also things that are what considered to be like macroeconomic issues, government issues. A lot of things that we're facing now is government issues. It's tariffs being put up, so obviously tariffs affect the pricing of imports and exports, and then it affects everybody else and trickles down. So I think that's another important thing to pay attention to. Like, make sure your news game is cool. Like, you know, they don't have to be like super high level, only dealing with the surface level stuff that pops up on your feed, but like actually digging in and looking and reading between the lines. That's why I wanted to call this out, because it seemed like it'd be common sense, like, oh, everybody knows Trump is with the terrorists, but like, what does that mean? What does that really mean? Like, how does this affect the numbers? So that's why I want to throw the news out there, because I want people to understand the difference between like rumors and just a whole bunch of shit flying through Instagram feeds, Twitter feeds, X feeds, you know, but really understand like, all right, I heard this, but what does this mean? The next thing to really focus on, or what to do when the stock market is crashing, is make sure that you are getting it when it's cheap. You know, really getting it when it's cheap, y'all. Like, for people who understand dollar cost averaging, which means putting in the exact same amount during the exact same time frequency, regardless of what the market looks like, man, you're going to be getting stuff for cheap, and it's eventually going to lower your average cost per share. So you want to make sure you have a low average cost, you know, because then you realize that, you know, I'm getting more for my money, and I'm getting the coupon, I'm getting the discount of saying, hey, I know this stock is going to go up, so let me catch it while it's cheap. And I'm not trying to catch it what we consider a falling knife, as in you're just trying to time when the price is going to be so low and you're buying, but then you're not realizing that, oh, it wasn't that low and you really could have bought it lower. That's what's considered catching a falling knife. So just dollar cost average and keep buying throughout the entirety of the crash, which is something I think what you should do too. And if you already have a number that is good, $5 a week, $10 a week, $100 a week, $1,000 a week, $10,000 a week, if you really, you know, getting bread like that, then you should be okay anyway, because you're like, oh, this is going to change. This is going to change. Let me check my correlation. But I would say just get it when it's on sale. Investors, certain type of investors, retail and wholesale and institutional investors. Institutional investors and market makers, they push the prices to what it is too, especially if it's outside of some macro stuff like government stuff. But so they already kind of know. But everybody else is like, oh shit, I've already baked into my budget the fact that if it goes lower, I'm going to buy even more. And it's okay. I'm like, I tell people, the best investment advice I tell people is that burn or spend enough money, or spend a certain amount of money and invest the amount of money that you wouldn't mind put a lighter to. Because you might think, oh man, I will never put a lighter to something. All right, well, tell me last time you bought something, exactly where it was at and what you did with it. Of course, I can name different things, but I'm sure plenty of us have purchased things and we bought things and we just didn't know where it was at. We lost it. We got the utility, what they call happiness in economics is called utility. We got the utility for that thing, and then it got lost somewhere in our drawer, our closet, or, you know, under the bed or somewhere, you know, and it's gone. But you could have spent that same money, and your money is better than somebody else's hand, which is in the book. Plug Money is an Art book too on jbwaters.com. Y'all make sure y'all hit that subscribe too. For real. Thank you. But yeah, definitely dollar cost average. Put the consistent amount in, get it on sale. People who are investing understand that it's on sale when it's this low, when it's crashing, because eventually when it goes up, you're gonna have even more, and it's a pie. It's a pie, y'all. So whoever, like, it's a pie. That's the one thing I want people to realize about equities. It's a piece of a pie. Whoever has the biggest piece of a corporate pie pretty much owns the company. That's why Warren Buffett is a great investor, but he's not super rich because he's a great investor only. He's super rich because he owns a lot of companies because he is a great investor, and vice versa. So those are the top 1, 2, 3, 4. I think I said 4 or 5 things already. 4 or 5 things. Another thing to do when the stock market is crashing is get your emotions in check. Really get your emotions in check, and get your emotions in check to the point to where you're just like, cool. I'm not attached to what's going to happen emotionally. I'm attached to what's going to happen logically. Another Money is an Art plug. One of the core principles and one of the core quotes in the book is it takes emotions to make money and it takes logic to keep it. So don't get attached emotionally. You can get attached logically and say, you know what? This is what I'm going to do now. This is what I'm going to do because this is happening. Cool. Let's just make that move. No feelings, no emotions involved. So just get your emotions in check, y'all. And if watching the news makes you emotional, then don't watch the news. Forget what I said. I think that was the third thing I said. Then don't watch the news. But yes, what to do when the stock market is crashing? Wow, what does that mean? I think another thing to do is kind of sit back and assess your moving forward plan. What to do when this happens again? What will I do when this happens again? What steps that I can take right now to make me feel even comfortable when this happens again? Because it's gonna happen. Stocks go up and down, but on a long time horizon, the stock markets always went up. Even when the Great Depression crashed, it went all the way down because it was so high, and it went all the way up. So it's gonna forever go up. The one way I like to put equities, securities, stocks is that without entrepreneurs, the corporate world wouldn't exist. Without the corporate world, the stock market wouldn't exist. So as long as we are a company that promotes entrepreneurs, which will promote corporations, which will promote private companies, then eventually promote corporations, you always realize that, hey, your money's always going to have a good place because it's a game. But I'm going to save that. I'm going to save that for later. I'm thinking about doing the Become Better at Investing, which some of these tips I just mentioned will be in it. So, but I think that's one of the things I've been really wanting. I put in the post, in my little post for, kind of like a survey of what you think I should do next for Become Better. Nobody said nothing, so I'm like, it's all good, it's all love. If y'all want to run in there and say something, that's what's up too. But I'm probably just end up picking something, so most likely it'll end up being Become Better at Investing and being able to see where it goes. But like I said, I appreciate y'all for sliding through. Tomorrow is Monday, Money Mondays, Market Mondays, all of that. You know what I'm saying? Run It Up Mondays, Motivation Mondays, my favorite day of the week. So y'all remember to like, subscribe, share, jbwaters.com. All 3 books are available. Money is an Art. As y'all can see them on my table over there. Successful Self-Talk, Have Your Happiness is available as well. Appreciate y'all, man. Thank y'all. And remember to stay well, be conscious, and write your world into existence. Waters, love.